We think in the back half of 2023, you'll start to see a pickup of IPOs, and a lot of our companies that we speak to aiming for 2024, depending on where they are in their funding and what they want to do.
Sure. A lot of the chatter is not internet necessarily. It's restaurants, it's gaming, right?
Yeah.
It's ARM, it's Instacart. Is there a make or break deal, do you think, overall that needs to succeed?
Yeah, I think you're going to see a couple. There's a couple in the internet bucket that are coming, so it's much room that Instacart's coming, right? I think that'll be important to see how that plays out and how ultimately investors think about the multiples around these stocks, right? And then what I think you'll see is more towards the back half of the year, you'll see more tech names come out. But once again, a lot of our companies are looking to see how these play out and also see the leadership of those companies. How do they trade? How do investors talk about them? And ultimately set up for a strong 2024.
All the post-COVID IPOs did terribly, though, last year. I mean, that was one of the worst performing sort of buckets of stocks. So are we talking about a different quality level of companies going public or just different valuations?
Yeah, I think what you're seeing for investors is they're looking for both, right? So they're looking for profitability, they're looking for strong underpinning unit economics, right? They're looking for larger TAMs to go after. But to your point, Sarah, I think that's spot on, right? The valuation levels are different now, too. So if you go back to pre-COVID, the average tech name was trading around 8 times revenues. Today, that number is more around 4 to 5 times revenues. So you've really seen a haircut to that. And the IPOs you've seen go so far in 2022 and 2023 have been very well orchestrated, right? So making sure there's strong underpinning bidders, strategics behind it, buying the IPOs, as well as pricing it really well as well.
But don't you have to just totally redefine them? I mean, TAM doesn't do it anymore, does it?
No.
You can't just say how big your TAM is and what your revenue per user is.
Absolutely.
You need cash flow, you need profitability.
Absolutely. And those underpinning unit economics are just so critical. But yeah, so either being profitable or showing a clear path to that profitability in this market right now is very important.
There was a story on the wires today about another firm, large, redeploying some investment bankers because of the deal drought.
Yeah.
Is that indicative of anything?
Yeah. Well, I think if you look almost sector per sector, right, and in the tech sector where we look and we talk to our clients, strong demand from the buy side, the institutional side for these names, right, because they can be big growers over time, right? And then number two, what's that pipeline look like? So for tech, we're pretty bullish on that pipeline, really starting the back half of 23 and then going from there into 24.
All right, M&A.
Yes.
The friction on airlines and ATVI, I mean, does that let up?
Yeah. So it's interesting. So obviously you're coming off your record year in 21 of $6 trillion of M&A. Last year in 22 we were down 35%, but still one of the best markets ever at over $4 trillion of M&A, right? This year has started slow. If you look at 22 more granularly, you'll see really 22 was strong, but really in the front half. So the back half of 22 was sort of slow. And so far this year, we're seeing one of the slowest starts in tech M&A in January and February. Now, what we think is going on in the background, though, is a couple different things. One is you're starting to see a narrowing of that bid-ask spread between the buyers and the sellers. And that takes time to come out, right? One of the things we like to do is look at when was the last funding done? When did they take their last VC dollars? And therefore, how much further do they have in runway before thinking of IPO or M&A? And what you know is you had a big spending of VC dollars in 21, right? So now you start thinking about 18 months out, 2 years out. All of a sudden, there's a question for the boards and the C-suite there. Can we IPO? Do we want to IPO? Do we consider doing M&A? And also, who are the buyers, right? $1 trillion of private equity money on the sidelines, $3.5 trillion of strategic dry powder on the sidelines. And there is demand. It's more of, can that bid-ask spread narrow to a point where both the boards are happy as well as the buyers?
So which parts of the tech sector would you watch there? Is it cloud, cyber? Like, which one are the prime deal candidates?
Yeah, I think it's going to depend, quite honestly, on the business model of each individual company, meaning that can you go IPO if you want to, right? Is that one of your exits? Some of them won't be able to. We actually bucketize them in 3 different buckets. The ones that are fully funded don't need to IPO, but may be interested in IPOing and do that anyway. The second bucket that are profitable but need to do something. They have a funding gap coming. They could IPO, they could M&A. And then there's that last bucket that probably aren't profitable for the near future, and probably the window's not open to them in the IPO side of things. So hence M&A, therefore, is more appropriate for them.